Hello, everyone. Welcome to my morning brief. My name is Ugo, and we do this every once in a while on this channel on Nairametrics TV. If you're not following, just hit the subscribe button and turn on your notifications so that you don't miss any time I have something important to say, which is the only time I get to come on the morning brief. This time around, there's something important to say. Of course, it's the start of the year, and this is my where to invest in 2026. So if you were one of those who watched my where to invest in 2025, well, I guess you would probably know whether, which ones I got right and which ones I got wrong. So you might want to go back and watch that one. But this is 2026, is a brand new year. And so happy new year to everyone. I would first of all start as usual with a little bit of my own, like outlook, essentially, because if you're an investor, you have to always, try and understand this sort of economy that we might be running this year. So it's going to be a year of two halves, basically. So there's going to be the year of the first half of the year where you're going to see businesses in action and government in action. And then the second half of the year, which is likely going to be tougher because that's when, we start to get into that election period. So investing in 2026 is not going to be that simple. With that in mind, I will go out and lay out what I think is my outlook for the year. I'm not going to speak in a lot of jargons, just a few things, So we're going to start with inflation. So inflation did come down significantly last year, 2025, largely due to base effects and the fact that we did some kind of rebasing. So inflation fell way lower than a lot of us expected. I think I projected an average of 25% or so last year, but we did way better than that. So that's good. I am also projecting that on average, I'm looking at on the average because it could be way lower, but if you sort of average it out, I'm thinking inflation numbers could be between 13 and 14%, maybe 13.5 or 14% in 2026. So that obviously means that we're going to be operating in a lower inflationary environment or slightly lower inflationary environment from what we're used to 2 years ago. And that could impact the sort of stuff that, or the sort of, returns or interest that's available for different kind of investing. In terms of GDP growth rate, we were at 4 point something percent in 2025. I kind of feel like we're stuck around that 4.5 to 4.9%. It would be an absolute miracle if we go above 5%. I wouldn't be surprised as well if we do below 4%, but I think on an average, you'll probably be looking at, 4.4, 4.5-ish% in 2026. So bottom line is that the economy is going to grow. It's not like it's not going to grow. I think it's going to grow in 2026. But not as aggressively as I had actually anticipated, because things didn't really go as much as I thought it would. Because for the economy to grow, you do need some sort of injection of spending. So Nigeria's capital expenditure needs to be mega, which is not at the moment. So, and I think we've all seen that government struggling with revenue and struggling to meet up capital expenditure budget from last year and even 2 years ago. That's 2025 and 2024. So without that, it's going to be pretty difficult. And of course, we're also not hitting that, crude oil production levels that we expect. And then lending rates are still probably high. So it's going to be hard to see GDP numbers go that high. Now, exchange rate, that's also another major barometer for investing. And I kind of think that Nigeria's exchange rate would probably, still be stable in 2026. I did say it was going to be stable in 2025. So you see, it was stable in 2025. So 2026, I expect that stability to increase, even though typically exchange rate tends to move within a band. It's not like it's fixed. We're no longer in a fixed exchange rate environment anymore. So it kind of moves from one rate to the other. So my suspicion is that, or my forecast more like, is that we're probably going to be around a 1,350, 1,450 level. We could occasionally stray close to 1,5, but I think on the average, your safe bet will be around, 1,4-ish. We could hit lower 1,4 into 1,350-ish at some point during the year, but I kind of think there's anybody who is betting against the Naira in 2026. You might be really pushing your luck too far, but hey, you never know what can happen. Things can just go awry and all of a sudden, you're in the money. But I always say, depending on, what your dollar exposures are, it's always important to bet always long in favor of the dollar. But this year, I kind of think the Naira will win again. Naira won in 2025 for the first time ever. That's also because globally, the exchange rate dollar was weak against most currencies. So no surprises that Naira did beat the dollar last year. So who knows? Maybe that's going to happen this year. Again, it all depends on a whole lot of factors. All right. So we get into where I think you should be investing. So when you're investing, you got to ask yourself who you are. Are you a passive investor? Are you or an active investor? So a passive investor, you don't really just involve in day-to-day investing. You just, put your money somewhere and just forget about it, or just maybe give it to someone to run for you or to invest for you. That's like your passive. You're not actively investing. But active investors are people who just love the adrenaline of trading. So they'll probably have some of these investing apps on their phone, and they buy and sell stocks themselves or treasury bills or whatever it is that they invest in themselves, and they just love the adrenaline. So as I go through what I think you should be investing this year, I would, touch on whether you're passive or active. So the first thing you should be thinking about investing, the first assets you should be thinking about about investing in 2026 is equities. Yeah, I mean, if you know me very well, I like stocks, I like equities. So equities market in 2025 returned 51%. In case you're wondering, why is it good talking equity? 51%. That's what we did return. And that was the best in years, right? So we've done 70% before. So, I mean, it's not like we've been in this area, this sort of territory before, but we did 51% last year. And I kind of think that equities will also do well in 2026. It might not be as good as the 51% that we saw in 2025, but I think it's going to be pretty good. I mean, most times equities tend to set the tone for how the market will look in the first 4 to 5 months. And so you got to always, invest on time. You got to make your decisions early. So what am I saying and why am I choosing equities? Well, a number of reasons. One, banking stocks, they are done with their recapitalization. So all the dilution, all the issues that banks have had, pretty much done with. So banks are going to be out there looking for money aggressively, looking for who to lend money to aggressively this year. And so I expect to see better performance from banks. Now, the sort of momentum that drove bank stocks in 2024 ahead of 2025 because they were trying to raise capital, and that momentum is not really there anymore. So I think for a lot of those banks, it is now, it is time for us to reflect our true value, because a lot of banks are intrinsically lowly valued in Nigeria. Just lowly, like you're seeing banks trading at 2 times their earnings. This is just incredibly small. Some even at 50% of their book value. So I think some bank stocks are going to do pretty well this year. And so banking stocks are one of the stocks that I'm going to look at. And bank stocks are pretty much liquid as well. Insurance stocks insurance stocks, watch out for them in 2026, because most insurance companies are going to want to be raising capital. And I always say the best time to get into stocks is not when they've raised the capital, is when they are getting into capital raise itself. So think about some of these stocks, and you don't want to miss them at all. So for insurance stocks, I have my eye on them. I think some of them are likely going to do well in 2026. So that's one area of equities I'm looking at now. Consumer goods are also another interesting area as well, because these are like FMCGs, the breweries here, the food manufacturing companies. They've had a somewhat recovery last year in 2025, and I think that recovery will go into 2026. So most of them did have a surge in their value last year, largely because of them raising capital and investors having confidence in them. I think that opportunities would arise again this year for those kind of investments. So you don't want to miss them as well when they do start reflecting, increases in prices. So very keen on that, keen on them. Also keen on and tech stocks. We don't have a lot of them on the exchange, but I think tech stocks are those stocks you want to look at. So like MTN, Airtel, even I didn't want to name. But anyway, these are tech stocks. So you might want to check some of them. The only two of them. So biggie. So the only two of them, I think, are the CWG as well as another tech stock on exchange. But you want to try tech stocks. I think that those stocks are likely going to be interesting to look at. I recall when we recommended MTN early last year, those who did invest in MTN have done pretty well now. So MTN is another one of the stocks that you might want to look at as well. Now, I do also think some energy stocks might do well. I mean, energy stocks didn't really do as much as I thought last year, as much as I expected last year. But let's look at energy stocks as well. But cautiously looking at energy stocks. When I mean energy, oil and gas, power, those kind of stocks. Want to look at them as well. Conglomerates as well. Have one eye on some conglomerates. Some of them are highly overvalued, but want to look at conglomerates as well as one of those stocks that we could want to invest in. So that basically, in a nutshell, is some of the things that I'm looking at. Now, one of the stocks that I tend to always look at, that I want to look at as well, is stocks that are companies that are about to raise debt, that are highly indebted. You know why? Because companies that are highly indebted, at some point in time, they will need equity. And so once they want to raise equity, they tend to always have their share price want to reflect the true value. And those are opportunities out there. So I'm going to be looking out for some of those stocks, and I'm going to share it with you on my other podcast, Follow the Money, on our blog, ftm.ng. Now, I'm also going to be looking at companies that could potentially be looking for an acquisition play. Now, companies that are target for acquisitions, their share prices always tend to go up. So we're going to be looking for those sort of companies as well for equities. So for equities, if you're a passive investor, which means you don't really, invest actively, you might just want to give your money to a mutual fund or to someone who is very good at it, at investing in equities. And also, there are a lot of very good fund managers out there. You might want to give them your money and tell them the sort of stocks you want them to buy for you, and then they can buy it and they can track it for you. Always have a very good exit price. Don't just get into stocks without an exit. So say, I want to make 30%, I'll make 35%, and then you're out. I like holding stocks for a long time, but Nigerian stocks, you got to be careful. It's not one of those things you want to hold forever, except you really are vested in that company. If you're not, man, just give yourself an exit target price. Once you hit that target price, get the hell out, and you can always come back again later when it drops down. So that is sometimes how I tend to look at it. If you're an active investor, but if you're a passive investor, you can also look at it that way. Just tell your mutual fund or your fund manager what your target is, what you're looking for, and they will get it for you. Now, the next investing for 2026 is fixed income. Fixed income did pretty well last year because they were a lot of, interest rates were very high. The CBN had very high interest rate. Monetary policy was like 27.5% almost all year round until they only cut it once to 27%. So because of that, treasury bills and most other fixed income securities were very, very cheap. And so, cheap in terms of price, but the interest rates were very high. So they were offering investors in treasury bills, in bonds, commercial papers, very sweet high interest rate. And I said it last year that last year was probably one of the best times for you to invest in fixed income securities, particularly the risk-free ones, because it was a high interest environment. Imagine, putting in like 100 million in treasury bills, that's 21%. You're just going to make 20 million without even batting an eye, without even doing anything. And your money is just safe, right? So that is what fixed income investment is. So for someone who is passive as well, fixed income is really the best investment that you want to do, because you're not thinking, you're just putting your money there and you're waiting at the end of the year or mid-year, depending on how often they pay, whether it's semi-annually or whether it's biannually or whether it's annually. So If it's biannually, it means they pay twice a year. If it's annually, they pay once a year, and then you can just take your investment and you move on. Now, I think interest rates are going to be lower in 2026 because I already told the inflation numbers are going to go down, and central bank is likely going to cut, a monetary policy rate in 2026. And so when that happens, interest rates tend to go down, and we're seeing it already in the market. We're seeing interest rate go down. So I won't be surprised if you start to see treasury bills getting to as close as 12, 11%, maybe even single digits. I won't be surprised if I see that in 2026. So that's the more reason why you probably want to start early to invest in some of these things and take positions ahead of when the rates come and start coming down. So commercial papers are also good. We're seeing a lot of companies going to commercial papers. Those are slightly highly risky. They're slightly risky. They're riskier than treasury bills or FGN bonds, but they offer better yields. And there are some good commercial paper companies that are issuing commercial papers because they would pay their interest rates and then they would also return your money. So if you see commercial papers at above 16, 17, 18%, man, jump on it. That's not a bad deal at all because I do think rates are likely going to go down, right? So FGM bonds are also good investments. If you see FGM bonds at double digits, you might want to include that in your portfolio as well, especially if you're passive, because like I said, I do see rates going down. Now, the government is going to borrow massively in 2026 because I've seen their budget plans already, and they are already planning for a large fiscal deficit, which they would only have to fund by new borrowing. So you're going to see a lot of borrowing this year from the government, and so get involved in it. Now, I know people are going to say, oh, what about taxes? Well, taxes don't affect you if your income or your profit is less than 150 million. So, I mean, I don't know how many of you, make that much, right? So, don't let that deter you. Of course, they're going to tax, fixed income securities, income. That's the returns you get on maybe investing in FGM bonds and some of these things. They do tax that 10% withholding tax. But I mean, so long as you're not the only one affected, it's affecting everybody. So it's an equalizer. So why are you stressing yourself? It's not just you, it's everyone. Capital gains tax, affects those who are making 150 million and above in terms of profit. So don't let that deter you at all. A lot of the things that you've seen online, yes, it's a concern, but mostly for institutional investors who are making massive gains. But for you that you're not, your gain is just within that bracket, you're fine. So fixed income, it's something else that I think that we should get into in 2026. Real estate, I mentioned it last year. I'm going to mention it again this year. For those who got into real estate early last year, I'm sure you guys are all smiling right now because real estate was an asset that did very well in 2025. I still think real estate is going to do very well in 2026 because the demand is pretty high. We have a very, very, very young population, and these guys are looking for where to stay. So I think the kind of real estate investments that are going to do well this year are always going to be short stay apartments. But some new trend I'm seeing now are, basically, self-contained apartments, right? That, people can, maybe imagine a single guy or single lady, just, self-contained apartments. You can have your room, and I think they're called studios, right? So studios, apartments, I think they are going to be very good investments for a lot of people. So if you have that kind of money, you have those kind of deals, get involved in it. You don't have to put out all the money at a go. Sometimes what you need to do is just put down part payments and then and then get into a payment plan, and then you pay over a period. That's a very, very, very good investment. I think that the demand for studio apartments is going to be very high in 2026 and beyond because of our young population. And a lot of young people, particularly Gen Zs, have basically just, they have a different idea about how to live. So they're happy to live in, self-contained rooms and parlor, don't have to have separate rooms, or maybe best case, maybe one room, but they can live in just the way you have your abroad studios with a nice, kitchen somewhere, bathroom and all that, well designed, very functional. They love things like that. So I think that's going to be a very, very good investment opportunity. Now, there's also very good investment that I see in luxury apartments. I think the luxury market seems to be coming back. So if you are wealthy enough to invest in luxury type apartments or real estate, you might want to get involved in that. Now, for those who may not have the money, you want to look at this MREIF thing. Research it is a government based funding for people who want to get into real estate. So if you're young and you qualify for MREIF, what the heck are you waiting for? You don't even need to live in that house. Just take that money, go and build a house, even if it's in Yanopaja or wherever. Put that house there. The income you get from that house in terms of rent should be able to pay down your mortgage and could even give you some change that you can use to offset your rent wherever else you want to stay. So real estate is the one investment that I would also suggest that we get into. Now, for those who are looking at, getting alternative revenue like dollar-based revenue, Euro bonds are also good. Some new Euro bonds are likely going to be issued this year because the government wants to borrow. Like I said, we did Euro bonds last year. The yields were like 9% thereabouts. So if you're someone who's looking for like 8, 9, 10% interest rates on a Euro bond, you might want to look in that direction. I suspect Euro bond could be lower this year in terms of interest rates, but it's not bad. Now imagine that, you have maybe, $5,000 in interest coming in from a Eurobond based on your investment. That could be a significant amount of money to offset something for you. So you want to look at Eurobond as a very good mix of investments that you have in your portfolio in 2026. I do like Eurobonds a lot, so that's a good investment, especially if you're somebody who wants to earn dollar income. Now, US stocks did very well last year, and there's been rumor of a bubble. I really don't know when that bubble is going to come. Different people have done different analysis on whether there's going to be a bubble busting, this year. Some people said last year there's going to be a bubble bust, but it didn't happen. Some are saying, tech stocks, AI stocks are going to finally bust. I don't know, man. Maybe not. But US stocks, there's still some very good US stocks there that are pretty solid. I like to buy those very solid ones, whether it's Netflix, Meta, Nvidia, that really like household names that have products that you probably even use. So whenever you see their share price go really down, below their like maybe year highs, it's probably a very good time to enter them. So some of those stocks I do like to own if you're looking to diversify your portfolio. Yeah, then cryptocurrencies. Well, I did say Bitcoin was going to fall last year. As much as it did fall by the end of the year compared to the start of the year, Bitcoin did well mid-year. At some point, it was 120K. So for those who got in and, got out at 120K, they're probably smiling pretty well. So I think that the price now is probably a very good entry because I do think at some point in time it's going to surge again before maybe fall. I mean, Bitcoin is always like this. So yours is just, you're not buying Bitcoin because you love it. You're buying Bitcoin because you want to make money. And so you study it very well, especially if you're not passive, active. If you're passive, maybe you don't want to do it because the prices just change almost every minute. But for an active investor, get in at the trough and then, sell when it goes high. So that is what I would suggest. But Bitcoin, it's another very good investment that you want to hold. And maybe to a large extent, Ethereum. For the other altcoins, I did suggest that we'll get into altcoins in 2025, but not sure about them this year. But if you're somebody who is very active with stocks, you might want to try them again. Now, precious metals did very well last year. Gold, I think gold did maybe 66% there, but in terms of return, one of the best precious metal assets. Even silver did very well. I kind of think as the world and as geopolitics starts to dominate how investors perceive the global economy, precious metals are always going to do well. So if you have an opportunity to invest in gold, even if you don't want to invest in a physical gold or gold related assets, you can buy ETFs. ETFs are not directly gold related assets, but they invest in gold assets. So indirectly, you're also owning gold. So you might want to look at ETFs as one of those investments you want to do. Lastly, I wanted to make this money short, but lastly, if you also invest in, it's also very important. I think it also makes sense, particularly if you're a passive investor, to invest in mutual funds. They're very, very good. There are a number of them out there. There are some that are focused on stocks. There are some that are focused on fixed income. There are some even focused on dollar-related funds. So you want to look at that array of investment, and they're out there even here in Nigeria, so you can invest in some of those mutual funds, and then you get a returns. I think there's an article on Nairametrics where we listed best performing mutual funds, and so you want to check them out and check some of those lists, and if there's anyone that you really like, you can invest in. There's some upcoming ones as well that are promising good returns, so you can also sit with them and make sure that your returns are fine. And the good thing with mutual funds is that you can exit when you want, right? And so these are professionals who invest your money for you, and it's almost like you're giving them, like, this is what I want, my benchmark. So if they don't meet that benchmark, and then you can just basically exit. So that basically are my investments ideas for 2026. Now, I also do sometimes suggest that you do all sorts of investing. Is not just about assets. I have certain rules for personal finance. Maybe I'm just gonna like put it out there, for you guys. So one of my rules is no, don't worry, I'm not gonna give you that right now. So let's not waste too much of your time. But anyway, maybe watch out for the next episode of this. I'm probably gonna give you some more of my personal finance rules about investing. But number one is actually start early. You got to invest early and then invest in yourself. So invest in yourself. It's very important that you invest in yourself as well. If you have businesses that you want to invest in, make sure that these are businesses that have proven money-making capabilities. Is either they are making money already, or you are clear about how they make money. Don't just invest in ideas. It's good to invest in startups that are just ideas if you have the money, because people who do that usually have a lot of money. So they invest in so many, and they hope that one can even cover the losses of the other. So if you're not in that bracket, avoid those sort of investments. Just look for businesses that have that have proven monetization value. And more importantly, when you're making that investment, you're investing in the person. So you got to look at who it is that you're investing in and then decide whether you want to invest in that business. That is my money brief for today and our very first money brief for the year 2026. I wish you all the best of 2026. I hope that your portfolio does way, way, way better than your expectation. And of course, keep your money close to yourself as much as possible. Give yourself targets for your return. And when you meet your targets, returns, exit, don't be too greedy. Just do the right thing. This is my money brief for today. And until we'll do this again next time, do have a profitable day ahead. Bye.